Hello, and welcome to our latest Tactical Asset Change update, the TAC. Today, I'm covering the changes we made in early July to our growth portfolios across all risk levels. Our last TAC was in March, when we trimmed risk shortly after the Middle East conflict escalated. Financial markets chose to ignore the risks and unbelievably rallied hard after the initial sell-off. What isn't so obvious to most is that the bulk of the rally has been driven by a narrow group of stocks, mainly those tied to AI capital spending. Meanwhile, valuations, particularly in the US, are still stretched, and inflation, fiscal deficits, and geopolitics still loom in the background. Our disciplined approach leads us to maintain our long-term strategic views and allocations, rather than chasing returns. So our overall asset allocation remains unchanged. We're staying well diversified and not simply following narrowly led markets. One small caveat, in lower risk portfolios, we have increased equities a little, mainly to ensure we have sufficient exposure to our long-term growth themes, such as disruption and technology. But let's look under the bonnet, starting with fixed income, where we have a sizable underweight. Large fiscal deficits and inflation risks point to higher long-term bond yields, with extra volatility, and credit spreads are extremely tight, offering little reward for the risk. We have made no fund changes here, as we like what we own, which is short duration, inflation-linked or index-linked bonds, and funds with higher credit quality. We also like active managers who can act fast when markets dislocate. Turning to alternatives, we hold a sizable allocation here because bonds are a less effective diversification tool than in the past and are more correlated with equities. We are constantly reviewing the funds in this sleeve and its overall makeup. Most of our exposure is in absolute return hedge fund style strategies, and over the last few months we've been looking for a strategy with a differentiated return profile to ensure this bucket can perform well across a wide range of market environments. So we've added the AQR Managed Futures Fund, a systematic, trend-following strategy that can profit from price trends, whether they go up or down, across equities, bonds, currencies, commodities, and even alternative markets. It has historically performed well during extended market drawdowns, exactly the protection you want when traditional diversification breaks down. This was funded by the sale of the Man Absolute Value Fund. Although they are an impressive team with an extremely disciplined investment process, recent returns have been a bit more equity sensitive than we'd like from an absolute return holding. Overall, we are happy with this well-diversified mix, which is aiming to deliver high single-digit returns with little volatility over time. Finally, equities, where we remain neutral. No fund changes here, as we are happy with our holdings. But we have rejigged portfolio weights, tilting it to the most attractive parts of the market. We've let our technology exposure run a little, such that its weight today is higher than at our last TAC, and we've increased our quality exposure, topping up the Red Wheel Global Equity Income Fund, which owns attractively valued, high-quality businesses with strong fundamentals. This was funded by trimming two of our UK funds, Artemis UK Select and Red Wheel UK Equity Income, banking profits after a strong run in these more cyclically orientated strategies. So where does this leave us? In a word, prepared. Elevated valuations, sticky inflation, geopolitical surprises. Our portfolios aren't designed to depend on any one outcome. Whether inflation lingers or market leadership broadens or geopolitical risks deliver another shock, there's something in the portfolios positioned to benefit. Yes, diversification has been out of favor in recent years, but we strongly believe its moment is coming. And the recent changes we've made ensures that we are ready for it. We remain incredibly excited about the opportunities and the major themes we're invested in. So if you'd like to take a deeper dive into that and our ideas, please do get in touch. And if you'd like to see more details of the portfolio changes, please have a look at the TAC report on our website. Thank you for watching.